So the next one is indicator whether discount is kind grant. Indicator whether discount is kind granted is a field used in sales procurement or accounting systems like SAP SD or MM module to record whether a non-cash discount, example goods or services instead of cash, has been given by the supplier or granted to the customer. So the definition is a discount in kind refers to giving goods, services or benefits instead of a monetary discount. The indicator is a checkbox or flag that marks whether such a discount applies for a particular transaction. So the purpose ensures proper billing and accounting for non-cash benefits, differentiates between the monetary discounts, example 5% offer, and goods or services provided free or extra. Helps in tax calculations and complaints reporting. So the scenario, supplier sends 100 units but 5 extra units are free as a promotion. Checked discount in kind granted. Customer receives 10% of invoice amount. Unchecked cash discount not in kind. Supplier provides free packaging or accessories along with the main order. Indicator is checked. Usage in SAP SD sales and distribution found in sales order, conditions tab or billing document. Setting the indicator ensures the system calculates price and tax correctly. Reporting used to track promotions, freebies or incentives. The key points must be carefully set because it affects billing, total value of invoices, and number 2, inventory. If goods are given free, stock reduces. Number 3, tax reporting. Non-monetary discounts can have different tax treatment. Number 4, usually applies per item or per document depending on system configuration. The important tips: always verify with your finance or accounting policy whether a transaction qualifies as a discount in kind before checking the indicator, because it has both inventory and tax implications. So sometimes you can receive the product. For example, if you are purchasing laptop, you can get mouse as a free accessories, or sometimes you can purchase a laptop, you can get mouse with the 50% discount. So there are like this different scenarios. Based on the scenarios, you need to check with your finance and accounting policies and you need to set up this indicator very carefully. The next one is profile for transferring material data via IDOC ProAct. The profile for transferring material data via IDOC ProAct refers to a configuration setup in SAP for transferring material master data from one system to another using an IDOC intermediate document, specifically the ProAct IDOC type. Let's break it down clearly. The number 1 definition: IDOC, which is nothing but intermediate document, standard SAP format for data exchange between SAP system or between SAP and external system. The ProAct refers to a specific IDOC message type used for material master data transfer. Profile: in SAP, a partner profile defines how data is sent, received and processed for a specific IDOC type and partner. So the profile defines which message type is used, how the IDOC is processed, which partner system receive it. So key components of the profile. Number 2, the component message type. The description is ProAct for material master. Partner type, example LS logical system, KU customer, LI vendor. Partner number, ID of the receiving system or partner. Process mode determines how the IDOC is processed, example create, update, material master. Output type and port specifies the transmission method, ALE, RFC or file. Direction: inbound or outbound. Inbound means receive, outbound means send. So the number 3, purpose: to transfer material master data like descriptions, units, classifications, valuations from one system to another system. Ensures data consistency across SAP system, for example development, production or testing, or from SAP to non-SAP. Automates material master update without manual entry. So these are all the purpose to use this iDoc Proact. How it works: create or update material in the sending SAP system. Number 2, SAP triggers iDoc Proact based on the partner profile configuration. Number 3, iDoc is sent via ALC, RFC or EDI to the receiving system. Number 4, receiving system process the iDoc, update its material master automatically. SAP transaction involved. So W20 partner profile setup, WE21 port definitions like RFC file, etc. BD64 distribution model for ALE, WE19 test iDoc. So the number 5 example scenario: company has two SAP systems, development system and a production system. A new material is created in development system. Outbound iDoc Proact is triggered to send material data to production system. Production system receives and updates its material master automatically. The important tips: always test Proact iDocs in a sandbox system. First, because errors in material master data transfer can affect production inventory and procurement processes. So initially you need to test in the development server, then you need to transfer the data to the production server. So otherwise it is going to affect the production system managing the inventory and the procurement process, so due to the error. So the next field is indicator for service based invoice verifications. The indicator for service based invoice verification is a field used in SAP MM material management and service procurement to control how invoices for services are verified and posted. Let's break it down clearly. Number 1, definition. When this indicator is set, it tells SAP that the invoice verification is service based rather than material based. This means the system checks service entries via service entry sheet before allowing invoice posting, commonly used for purchase orders for services instead of goods. The number 2 key concept: service entry sheet, generally we used to call as SES, document created by the receiver to confirm service performed. Then invoice verifications step, where supplier invoices are posted in SAP. Then service based IV, SAP allows invoice posting only after SES is approved. So number 3 purpose: ensure payment is made only for service actually delivered, avoid overpayment or incorrect payment for services, supports audit compliance and proper accounting. So the number 4, how it works in SAP: create a service purchase order in SAP. Number 2, service provider performs the service. Number 3, receiver creates a service entry sheet confirming the work done. Number 4, invoice from the service provider is received. Number 5, SAP allows invoicing posting only if SES exists in and is approved. So service entry sheet is very, very important in this entire process. The indicator found in PO, invoice tab, service based IV checkbox. If unchecked, invoice can be posted without SES, not recommended for services. Generally not recommended for this service related business. Example scenario: PO 10 hours of IT consultancy at 1000 rupees per hour. Service entry sheet 8 hours completed and approved. So invoice received for 10 hours. So the purchase order received for 10 hours, 1000 rupees per hour. In service entry sheet, which is nothing but actual work is done for only 8 hours, that 8 hours only approved in service entry sheet SES. Invoice received for 10 hours. With the service based invoice verification indicator, SAP allows posting for 8 hours only, preventing overpayment. The important tips: service based invoice verification is mandatory for service POs, especially in outsourced services, maintenance contracts or consultancy, because there are no physical goods receipt like a material based IV. The next field is indicator supplier subject to subsequent settlement accounting. Is a field in SAP material management and accounts payable used for suppliers whose invoices are handled under special settlement procedures, typically related to down payments, advances, or long term contracts. Let's break it down one by one. There are three stages. Number one is definition. When this indicator is set, the system knows that the supplier's payment are not final at the time of invoicing. The supplier account is subject to subsequent settlement, meaning the invoice or payment will be adjusted or settled later. Common in scenario like construction contracts, long-term service agreements, advance payments. In these scenarios, you need to apply this indicator. The number two purpose to track advance payments, progress payments, and final settlements separately. Ensure correct accounting and reconciliation. Prevent double payment or posting errors in SAP. Number three, how it works in SAP system. So the number one, supplier is flagged with the subsequent settlement indicator in vendor master purchasing data tab. Number two, when an invoice is posted, SAP treats it as a provisional or pending settlement. Number three, during subsequent settlement, the system calculate final amount payable, adjust the vendor account, post the difference to the correct GL accounts. In SAP transactions, F-48 or F-54, down payments and clearing. In MRKO, settlement of GRIR differences, go to vendor master under the purchasing tab, select the subsequent settlement checkbox. So the example scenario, step number one, vendor A provides 3 months of maintenance services. Number two, advance payment of 50,000 is made already. Number three, invoice received for 1,50,000 rupees, partially settled against advance. Number four, at month end, final settlement is done. Number five, vendor account is updated, system post difference automatically. So this is example scenario. The important tips, this indicator is usually set for key vendors or contracts involving partial or staged payments. It ensures the SAP automatically handles subsequent adjustment and accounting, reducing manual errors. So the next field is comparison/agreement of business volume necessary. So what is this? The term comparison/agreement of business volume necessary is generally used in procurement, sales, or contract management, often in your SAP systems. It indicates whether a formal check or agreement of the expected or actual business volumes between the buyer and the supplier is required. So we can break down a little bit. The number one definition, it signals that the company must compare planned, agreed, or actual business volumes with the supplier before proceeding with certain actions. Helps ensure that targets, quotas, or contract limits adhere to. Number two is control spending or procurement volumes against supplier agreements. Ensure contractual commitments are met. Example, minimum purchase or quantity or revenue. Avoid over ordering or exceeding agreed limits. Facilitate reporting and auditing of supplier performance. When it is used in framework agreements or long-term supply contracts, before posting orders or invoices, SAP may require confirmation of business volumes. For discount or rebates tied to volume thresholds, example, supplier gives 5% rebate if total order is greater than the 10 lakh rupees. In SAP systems, this can be checked. In SAP systems, this can be a checkbox or indicator in purchase order or contracts. So let's say in the practical example, the supplier A, there are two suppliers, supplier A and supplier B. The contract volume is 50 lakh rupees per year for vendor A. Actual volume 40 lakh. Comparison needed? Yes. Confirmation shortfall or adjust order. The action need to be taken for vendor A. Vendor B, 1000 units per quarter, but actual volume is 1050 units. The confirmation needed? Yes. Approve, excess or renegotiate. So these actions we need to take. And the fifth one is SAP usage. Often linked with purchasing info records or contract management, the system can block further orders until volumes are compared or approved. Helps in automated reporting for rebates, penalties, or contract fulfillment. The important tips: this indicator is particularly important for volume based contracts where exceeding or not meeting agreed business volumes impacts pricing, discounts, or penalties. The next field is revolution allowed. The term revolution allowed is commonly used in SAP accounting and inventory management. It indicates whether a material or asset or currency item can be revalued in the system to reflect current values. Let's break it down clearly. So, the number one, there are five stages. Number one is definition. Revolution allowed, which is nothing but the system permits adjusting the value of an item in the sense it can be a material or asset or account to reflect current market price, exchange rate, or valuation changes. Used in inventory management and asset accounting and finance. FI. Number two purpose: ensure financial records are accurate and reflect the true value or the current value. Maintain compliances with accounting standards like IFRS or GAAP. Adjust for price fluctuations, currency changes, or market value changes. So, usage in SAP. Number one, material master under MM. Field indicates whether material valuation can be adjusted, useful for price fluctuations or periodic inventory revaluation. Number two, asset accounting under the financial accounting. Field allows revaluation of assets for market value or inflation adjustments. Number three, currency revaluation under financial accounting FI, applied for open items or foreign currency at period end. Transactions/configurations. In MR21, price changes for materials. AR01/F.05 asset revaluation. F.05/FIGL underscore FC underscore VAL currency revaluations. So these are all the three methods. Number 5, key points must be carefully controlled. Incorrect revaluation can distort financial statements, often restricted by user authorizations, only applicable for item flagged as a revaluation allowed in master data. The important tips: always check whether revaluation is allowed before performing inventory price adjustment, asset revaluations, or currency adjustments to avoid posting errors. So the next field is supplier RMA number required. The term supplier RMA number required is commonly used in procurement, return managements, and ERP system like SAP MM and SD modules. It refers to whether a return merchandise authorizations number from the supplier is mandatory for processing returns. So the definition: RMA, return merchandise authorization number, a unique reference number issued by a supplier to authorize the return of defective, damaged, or excess goods. So this is called RMA, return merchandise authorization number. Indicator required means the system or process cannot process the return without this RMA number, which is received from the supplier. Number 2 purpose: ensure returns are authorized and traceable. Helps the supplier track returned items and approve credit or replacement. Prevent unauthorized returns, avoid dispute or losses. Facilitate accurate accounting, credit notes, and inventory adjustments. Number 3, how it works in practice. Buyer identify defective or excess goods. The number 1. Step number 2, buyer request RMA from supplier. Number 3, supplier issues RMA number. Number 4, buyer ships goods with RMA number referenced. Number 5, system, which is nothing but SAP MM, validate the RMA number before processing the return or credit memo. So then, SAP usage. In SAP purchase order or return delivery, there is an RMA field. If the supplier RMA number required, indicator is set. Return delivery or credit memo cannot be posted without RMA number. Ensure processes compliance and traceability. Common in warranty returns, vendor managed inventory, and quality returns. So these are all the commonly used cases in our SAP system. The important tips: always obtain and verify the RMA number before shipping returned goods, as this prevents credit delays and stock reconciliation errors. So the next field is indicator relevant to price determinations vendor hierarchy. Is a field used in SAP material management module and purchasing to control how vendor specific pricing is determined during procurement. So let's break it down detailedly. So there are 5 different stages. Number 1, definition. When this indicator is set in our SAP system, the system considers the vendor hierarchy for automatic price determination in purchase orders. What is vendor hierarchy? A ranking or sequence of vendors that SAP checks when determining the price for a material. Number 2, purpose. Ensures that the correct purchase price is selected based on predefined vendor priorities. Supports multiple vendors for the same material with different pricing conditions. Helps in automating pricing determination and reducing errors in purchase orders. Number 3, how vendor hierarchy works. So the number 1, define vendor hierarchy in SAP, a list of vendors in priority order for a material. Number 2, assign material and purchasing info record to the vendors. Number 3, when creating a purchase order, SAP checks the hierarchy. First, checks the vendor in hierarchy for valid pricing conditions. If not found, move the next vendor. So step number 4, price is determined automatically based on the first matching vendor in the hierarchy. So then stage number 4, example scenario. There are 2 material X and Y. The material X vendor hierarchy is vendor A, vendor B and then vendor C. The relevant to price determination, yes, selected price from vendor A. System will select the price from the vendor A based on the vendor hierarchy. So the material Y, vendor B and vendor C. So the relevant for price determination is no. Price determined by other conditions. Okay, there are 2 scenarios. The usage, field locations, purchasing info record, control data / vendor tab, price determination indicator. Indicator checked, SAP considers vendor hierarchy during PO creation. Supports conditions technique for pricing discounts and surcharges. The important tips, always maintain a clear vendor hierarchy for materials with multiple suppliers to avoid incorrect price selections. This is especially useful for large organizations or centralized purchasing where the multiple vendors supply the same material at different prices. So the next field is indicator index compilation for subsequent settlement active. The indicator is a field in SAP MM and SD module and accounts payable used in the context of subsequent settlement or contract based procurement. So let's break it down clearly. So the first one, definition. When this indicator is active, the system compiles and tracks an index for items or services to be used in subsequent settlement accounting. The index is typically used to calculate price adjustments, escalations, or final settlement for contracts or long-term agreements. In short, the indicator signals that the system should collect and maintain data for later settlement calculations. The stage number 2, purpose, facilitates automatic adjustments in subsequent settlement, useful in contracts where price are linked to indices, benchmarks or consumption volumes. Payment is made after final verification or settlement. Ensures accuracy and transparency in long-term procurement or service agreements. How it works in our SAP system? The number 1, supplier or contract is flagged with the subsequent settlement. Number 2, index compilation indicator set for material or services covered. Number 3, during contract execution, SAP collects the relevant consumptions, price or volumes, maintains a running index for settlement calculation. Number 4, at settlement time, SAP uses the compiled index to calculate final payable amount, adjust vendor's account accordingly. SAP fields and transactions. Under the vendor must go to purchasing data, subsequent settlement. So you can use the T code ME32K or 33K for contracts, MRKO for GRIR clearing. Custom index tables may be used depending on configurations. So the important tips, this indicator is critical for contracts with variable pricing based on indexes, ensures automated, auditable and accurate settlement, reducing manual calculation and errors. So the next field, indicator document index compilation, active for purchase orders. The indicator document index compilation active for purchase order is used in SAP MM material management and contract management to control how data from purchase order is collected and processed for subsequent analysis or settlement. Let's break it down clearly. The step number 1 definition. When this indicator is active, SAP compiles a document index for each purchase order. This index collects key information such as quantities, values, and dates, which can later be used for subsequent settlement, reporting and auditing, price adjustments, or benchmarking. In short, it signals that the system should track and store PO data systematically for later use. Second stage, purpose. Facilitates subsequent settlement accounting for contracts or long-term purchase agreements. Support automatic calculation of adjustments such as price escalations, volume-based rebates, index-linked payments. Improves transparency and traceability of purchase orders. Stage number 3, how it works in SAP. Step number 1, purchase order is created for a material or a service. Step number 2, document index compilation indicator is active. So SAP records the relevant PO data in index tables. Step number 3, during subsequent settlement or reporting, the system reads the compiled index, calculates final settlement or adjustment automatically. Step number 4, reduce manual effort for long-term contract and ensure accurate accounting. And SAP transactions and tables. In ME21N or ME22N, so PO creation or PO change, set the indicator. MRKO, settlement of GRIR or contract based adjustments. Tables may include EKPO, EKBE, custom settlement index tables. The stage number 4 example scenario. Step number 1, long term supply contract with vendor X. Step number 2, purchase order created over the year. Step number 3, document index compilations active for all POs. Step number 4, SAP collects PO quantities, price, delivery dates. Step number 5, at contract settlement, SAP calculate rebate or adjustment based on compiled data. The important tips, use this indicator for framework agreements or long-term contracts, not for one-time purchases. Ensures system can track cumulative volumes and prices for reporting and settlement purposes. So the next field is automatic evaluated receipt settlement for return items. This is used in SAP MM Material Management and Accounts Payable FI, specifically in the context of returns and vendor invoicing. Let's break it down detailedly. There are different stages. Stage number 1, definition. Evaluated receipt settlement, generally we used to call as ERS in short form. A process in SAP where the system automatically generate an invoice for the supplier based on the goods receipt without requiring a separate supplier invoice. Okay, so for return items, this extends ERS to returned goods. SAP automatically calculates the credit or debit to the supplier based on the return quantity and price. In short forms, it allows automatic billing or credit posting for returned goods without manual invoice processing. So stage number 2 purpose, reduce manual effort for processing returns, ensures timely and accurate credit posting to the supplier, and maintains consistency between inventory and accounting. Useful in high volume return scenarios, for example, defective products over deliveries. Stage number 3, how it works in SAP. Step number 1, return delivery is posted in SAP for goods returned to the supplier. Step number 2, if the automatic ERS indicator is active in SAP, reads the purchase order, delivery and pricing data, automatically generates a credit memo or invoice document for the returned items. Step number 3, supplier is credited automatically and accounting is updated. SAP field and configuration. Under the vendor master purchasing data, you can go to ERS indicator active. Purchase order and item data, ERS allowed for returns. Transaction code MRRL, release of GR based invoices. MIRO, manual invoice verifications if ERS not used. ERS process eliminates manual MIRO posting. So this is important information. Stage number 4, example scenario. The step number 1, vendor supplies 100 units of material A. Step number 2, 10 defective units are returned. Step number 3, return delivery posted in SAP. Step number 4, automatic ERS generates credit memo for 10 units at purchase price. Step number 5, vendor account is updated automatically. No manual invoices needed. So this will reduce, obviously, end of the day, manual work. The important tips: ensure price conditions and PO references are correct, as ERS relies on PO and GR data. ERS for return items is usually enabled for high volume or repetitive returns, reducing administrative overhead.